Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, it seems most of the day today we had a mini risk-off day. However, once again, volatility amongst all asset classes continues to drip lower. Let's talk first about the equity market. Late yesterday, we did have a sharp break in the market, causing the first vol bid we've probably seen in a week, maybe 2 weeks. VIX closed a little bit higher, and this morning and throughout the afternoon it has been higher, but right now VIX is basically unchanged. One thing that's important to note is that we've seen a flattening of term structure. When vol did catch a bid, we saw S&P December up about 40 basis points, January up about 25, but yet if you look at December of 2014, only up about 10. So a parallel shift down, as it were, in term structure. And all the while, as vol did catch a bid, we did see a softening of skew. Again, people monetizing put hedges or just rolling down their hedges to lower strikes by selling put spreads. Moving on to the rate market, the fixed income market, all we're seeing right now is vol dripping lower. Volatility has been sucked out of the market, and it continues to be sucked out of the market. The only notable change that we've seen today from traders I spoke to is there has been some out-of-the-money call spread buying. I think people do think that the 10-year will continue, the yield will continue lower, hence 10 years will rally with the addition to QE3. Moving on to FX, once again, just like yesterday, the same narrative. Commodities and commodity currencies, Canada, Aussie, firm to flat volatility, Euro, Swiss, Yen, volatility dripping just a little bit lower. Not down that much, but a little bit lower than it was yesterday. Moving on to the commodity sector, oil vol actually is the most notable down, is down quite a bit today. Do keep in mind that oil vol was up in most products yesterday and the day before, so traders right now don't know if this is a thing of the future or if it's just a retracement of the volatility movement we've seen over the last couple days. Lastly, with the metals markets are continuing the same theme as yesterday. Base metals, aluminum, steel, copper, that volatility seemed to be unchanged on the day. There was some buying of out-of-the-money calls in the copper market today. On to the other metals of gold and silver. Those are dripping lower, and actually quite a bit all day today. One thing that you should note with gold is that gold vol was up pretty substantially last week, so it might just be one of those things where the market's not getting the lift that it thought, hence volatility is selling off, especially with gold being down to about $1,714 an ounce as we speak. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.